Okay, quick video for myself, Harvey Goldman. No cuts, no edits, no filters, and no hair. So for today's video, I want to give you some unsettling facts about investing in the UK. So you think you're being smart with your investments? Well, stick around. I'm going to demonstrate the risks hiding in plain sight that could quietly ruin you, especially if you don't know what you're doing. So investing is sold as being the smartest path to wealth. But the game isn't necessarily as fair as it looks, especially in Britain. So by the end of this, you'll know the hard truths about investing that most people either ignore or just simply don't know. So let's get into it. So you've got hidden fees, and this is how exchanges, whether it's crypto, whether it's stocks and shares or Forex, whatever your poison is, this is how they make their money. Hidden fees. Actively managed UK funds often charge between 1 and 2%, whether it's yearly, whether it's monthly, whether it's per transaction, whatever it might be. These things quietly drain your wealth, whether it's over a week, a month, or even over decades. And obviously, this is not good. There is an expression that says that in a gold rush, the only person that makes any money is the person selling the picks and shovels. And that's probably very true. In the UK particularly, we've got the FTSE 100 and also the FTSE 350, but the FTSE 100 is pretty stagnant. Historically, it's underperformed, especially when compared to the US markets. So UK investors wanting to invest in UK companies, they often miss out on potential growth. Buy to let isn't what it used to be. Landlord taxes, as of the last 12 to 18 months, are now at record highs. We've obviously got high interest rates, and there are far tougher regulations that have come in that are now just literally squeezing every last bit of tax and extra money they can out of landlords. So it's put the squeeze on their profits. Now, this has left many landlords with little choice but to either A, sell up their property, or B, sting their tenants for more money. As they say, poo rolls downhill, for want of a better phrase. So if they get charged extra, guess what? The tenants get charged extra. And it's a business after all. There are ISA limitations that are potentially coming in. I'm a big fan of ISAs. £20,000 a year feels like too little to be able to put in to shield from the government's greedy claws. There is a vicious rumour that Rachel from Accounts is thinking about capping it at £4,000 or £5,000 thereabouts for the cash ISA, in the hope that it's going to propel people to invest in the stocks and shares ISA. Now, that's all fair and good. And I believe that the overall cap of 20k is still going to stand. But this means you'll need to put £16,000 a year, if you've got it in the first place, into something that potentially is quite risky. Now, although over time, stocks and shares ISAs do generally outperform cash ISAs. Cash ISAs return typically between 3 and 5%. Stocks and shares is normally around 6 to 9, something like that. It's not guaranteed every year. So if you just want to put your money somewhere for a year or for 3 years, you could wind up losing out. If you're okay with leaving it somewhere for 10 or even 15 or 20 years, the odds are you might be okay. Now, I think that most people in these economic times are probably going to be pretty risk adverse. I don't want to put my money anywhere that doesn't guarantee me a return. And obviously, cash ISA, although it's a lower rate of return, that return is guaranteed. And I think that many people, myself included, are going to be pretty miffed if and when the ISA rate finally drops for cash ISAs. And I won't be putting my money into a stocks and shares ISA. I'll just find some other place to invest it. So I'm pretty sure that Rachel from Accounts has made a big mistake and that it's going to have a counter effect to that which she thinks will happen. She thinks it's going to propel people to invest in these larger companies in the UK and risk their money. My view is, why would they? Look at her track record. Come on, look at her track record, and we'll just leave that there. Inflation erosion is obviously massive, and with inflation the way it is, savings, even low risk bonds, they often fail to outpace the current inflation rate, which is purported to be around 3-ish, 4%. The reality is, come on, let's be real. Look at what's going up around you. Look at the amount it's going up year on year. If inflation is less than 7 or 8%, I'd be amazed, and I'm pretty certain it's a lot higher, probably into double figures. The property market is volatile. UK house prices actually dropped slightly in early 2024 in some regions. In mine, they didn't. Yet the costs of these properties remain inexplicably high. And because they're high, obviously, people can't afford to buy them. First-time buyers are absolutely screwed, which means they're stuck in a very expensive and equally pressured rental market. It makes me think that I'm probably better off just buying a mobile home or a static home and living on a holiday park for like 50 grand outlay and then 3-4 grand a year in ground rent. The solution paths. So, what can we do? Well, if you want to invest money, really diversification is your best friend at the moment. Passive investing is key. Obviously, understanding costs, but also you need to avoid hype. And it's really easy to get caught up in this. And around 2015, 2016, I got caught up in it with crypto in a big way. Then, of course, the 2017 December crash came. I ended up losing a load of money on it. It was only profits that I lost, but I still lost money. And yeah, that was a real eye opener as to how risky and volatile the markets can be, and how 1 minute you're flying high and literally 12 hours later it's in the pan. So you need to avoid hype-driven assets. The biggest one recently, I think, has been NFTs. They spring to mind, and obviously meme coins and the rest of those things that the celebrities shill on their social media. Don't fall for it. It's all crap. What are your thoughts on this? I'm still relatively new to investing in anything other than crypto. I've actually got a 10-year history with it, only just. But as far as other investments go, 2 years tops. So really keen to find out your thoughts and opinions, how you would basically avoid risk in an unsettling market. Our economy's on the floor at the moment. Is it worth investing? Is it a way out? Will it save us? Or is it just a way of putting your money somewhere and hopefully hedging your bets? Let me know. Really keen to find out. So YouTube's going to pop another video there. I'm going to go away and have a scrub because it is a blistering hot day. And like, follow, subscribe, ring the bell, all that jazz. Goldman, peace out.